Hello and good morning, my friends. Welcome to the Breakfast Club. My name's Darren Hancock, and we are here on a Thursday right before non-farm payroll. So what do we know about NFP? Not for professionals, not for people, not for players, no fun people. NFP, that's where you want to be on the sidelines and watching the market, just observing from a distance. If you're in your trades, you got to get them all finished. Typically, you get them all done in the morning session here today. So, anyway, be careful. It's no use blowing your demo accounts. Nothing worse than going into a weekend with a loss. After NFP tomorrow, there might be something in the afternoon when the markets have calmed down a little bit to grab yourself an afternoon delight on Friday with very low leverage, because once again, you don't want to go into the weekend with a loss. So what have we got today? I bet my friend Kirk is already on board. Let me check the channel, make sure we're there he is. Good morning, Kirk. Mr. Reliable. Good morning, good morning. Thank you for the win. Looking for oil to... Still looking for oil to get back to this order block here. I was just looking at that. Kind of going through some of these. We're still inside the golden daily fair value gap here. See how the spike's up there, trying to get up there, and they're reaching into this breaker here. Maybe not a breaker. That would be, you could say it's a parent breaker of that run, that whole run there. Mean threshold of this candle. That one's bigger. That one's body is actually, all this stuff's inside this one anyway. And that's a breaker. So mean threshold oil of gold. So we've got a gap here. We have a swing point occurring where the body's respecting the bottom of the daily inversion fair value gap. So potentially pull back into, got a body above here inside the breaker, mean threshold of the breaker, and a consequent encroachment of the gap. I'll just throw that out there. Put that right in there as a point of interest. Citigroup, oof. They did a nice little gap up the other day, or yesterday. I'll leave them back on the daily. You want to see this gap stay open, return to the top of the fair value, or the high here, continue up for that. Laurentian, poor old Laurentian Bank, back in its consolidation. Bank of Nova Scotia, the only one kicking up. Alright, that's Canadian. All the ETFs are down. Let's look at the three. Futures markets. Gino Romero I like that name. What do you see in euro in the daily? Looks inversion fair value gap to target the sell side liquidity. On the daily, did you say? Daily looks like, let's see with the daily. Gino. This here is the, see that? Nice. Yes. See how it's pulled and closed through? Let me make this a little bigger. See how it's closed through that? The body's closed through this inversion here. We've come back up wicked into the higher time frame. What is that? Oh, I was wondering what all those candles were, but those are swing projections. Let me remove that stuff. Cleans things up a little. I was wondering what those lines were. Okay, so here's your fair value gap, Gino. So yes, daily inversion now. We'll make sure I switch that to an inversion so I don't mess myself up. Darken it down a bit. Now, see how it's returned perfectly to that? And we've had a run down. We haven't really taken out any lows though, but we have come back to mean threshold of this down close candle, which is the breaker. First a run up. Yeah, above these highs. So this breaker, mean threshold held it. So really you're between this candle here and this candle here, but, or this inversion fair value gap. So if we do get a run back up, look for another. If it does poke back into here, you don't want to see the mean threshold of this candle get lost, but you could drive straight into mean threshold, sorry, the consequent encroachment of this inversion fair value gap on the daily. Again, you don't want to lose more than 25% of that wick. I don't think you want to get up into 50% of it. It's been worked quite a lot. And that top half of that inversion fair value gap's been worked pretty good. So is the bottom half. So this is what I want to see. Is just kind of, if it does pop in here, look for the body and the mean threshold. They haven't been traded to yet. So look for a reaction off of them. If you start to lose that, if we lose the mean threshold here, or the CE of this inversion, then look for the wick. No more than 25% of that wick. If it wicks up to 50%, that's your line in the sand for me on that. Just because breakers hold well, it'd be nice to see it just tap it one more time, or the body, just dip in there one more time to the body, and then start trading down and through this. If we've got downside pressure, I'd like to see the rest of this BISI fill in, liquidity on the downside, a rebalancing of this BISI, buy side imbalance, sell side inefficiency. So we do have a little bit of sell side inefficiency yet to be filled. So we need to lose the mean threshold of that on a close today to get that. If that makes any sense. I was listening to ICT last YouTube video, Model 7 supplement, and boy, some great nuggets on time distortion. Morning, Southie. AB, good morning, my friend. Looks like it hit right off your level there yesterday, AB. Remember, we're looking for that big plummet down yesterday. Where was it? Oh yeah, right here. Remember, we were looking for it to run on the news release, to run all the way down, take out or come back to that level. I was expecting it to happen somewhere in here, but it shot all the way up, took the liquidity out of here. Then it ran down to that level you were talking about, which was just wanted to see a wick get through there on the hourly. I think it was an hourly, just got a wick through that. Nope, it came right down there, tagged it in the bodies, inside that little order block we looked at. So good level there, AB from yesterday. And then it ran right up to that on the daily. I want to show you guys that daily thing I was looking for. Then we were talking about that level again up in here. Ran all the way up in there. Ripped down. And now we're starting the day off. This is the reversal of Thursday. We're calling for a reversal Thursday, and we're looking for, remember I was talking about, it would be nice to see that on that news release, that would be the start of the reversal. And sure enough, we've got the start of the reversal happened at that time. If we go down to the lower time frames, you'll see how that was the news release. And here, the shenanigans that happens in that 3 o'clock macros, the 4 macros that happen in the 3 to 4 o'clock time, all the way back to that area we looked at. And now we've had a slow Thursday reversal right off that time. So everything's working good. Carrots up here. Mean threshold. We have to lose the mean threshold of that candle to continue to the upside. We've had all this liquidity taken out yet, but we've got lots of SIBI down here, or over here, or up there, yet to be explored. And we still have that imbalance on the daily. So let's look. I would like to see this come down one more time into this area in this order block here and get some support off of here in London, and then take out London's high. We still have a bunch of liquidity up here. I don't want to see it kind of just come up here first at 10 o'clock and then drive down. So it all depends on where the wick's going to be for the 10 o'clock run. You're expecting more downside. Yeah, if we don't get that mean threshold taken. Again, it's a non-farm payroll. It could be chaotic. It could be all over the place. Chances are there's going to be some downside. We're getting into February now. Seasonal tendencies. I mentioned this yesterday. Make sure you review your seasonal tendencies. Go on Equity Clock, equityclock.com. Type in seasonal tendencies, and you'll find February into March there tends to be a drop in the market. Then March all the way up into the first week of May is a rally point. Then we have a slight depreciation into May, June, I think it is. I'm trying to draw this from memory right now. A little spike in June, then to drop down into July, August. Now, this may not be a typical year that we're going to see, albeit election and the conspiracy theories abound. But if you're somebody who wants to try and maintain office, you want to keep the economy propped up as much as you can, take credit for that. I see Trump's already trying to take credit for his what the market's doing. And I was watching the news the other day about now they're attacking Taylor Swift in case she endorses Joe Biden. Wow. Attacking pop stars now. Gotta love it. She's got some pull, that girl. She got some pull. Anyway, we won't get into politics. What are we looking at for downside? Yes, downside just to get us monthly wick, then next week to the moon, lol. Wouldn't that be great, hey? If this was a non-typical type of year, we just get that wick forming in the monthly, and then all of a sudden we start blasting off all the way up into May, June. This could be a nice long run all the way, all year into October. And then some unsettling of the markets while the debate goes on between the two candidates and how they can affect the markets. Or do they affect the markets? Does the algo sit on the sideline and say, what's important here, Joe or Donnie? Okay. See where we are in the middle of this range right now? I love this tap. You threw it. Here's where my... Oh, wait a second. Where's this coming from? Oh, way over yonder. Oh, that was the one we were talking about the other day. Right, yesterday. Let's bring it into alignment with what's going on right now. I'll do like this price imbalance right here. We shall call this price imbalance. So we came down, bodies there respecting it, close on the high, open, and start running back up, taking out these highs and looking to get back into the range here, into the premium. And look where we're sitting. If we pull our FEB tool from here to here, 50% of the range. See how we're bouncing off that right now? It'll pop up into the premium for a run down and probably into here in this order block here. We'll run down below the lows, come back up to the order block, and now we're looking to run below these lows again now. So, banging off that 50. So London's range is pretty small. As expected for non-farm payroll, we seem to be going a little haywire sideways here now as we move into that Friday's news event. We have another news event here at 10 o'clock. Oh, and as promised, I will show you the we're doing the Robin's Cup every morning. Want to see the only person I do know, Robin's Cup trading leaderboard. Here we go. Here you go, my friends. Here is the leaderboard for this morning. Let's hit refreshables. Oh, we've had a drop, Mr. Kelly Wallace. Matt. Trades by Matt. He's dropped some. He was 120 some odd percent, then down to 60 some odd percent, 56. Good old John Bannon. He dropped a smidge. And any guy named Darren, well, and he's from England yet. Darren Hill, well, you gotta love that guy. Good old Darren Hill. In the Forex side, 13.4%. I'm rooting for Darren Hill just because he's Darren and he's English. He's all right, mate. Going in. Even DH. That's like the bonus. That's the bonus right there. Darren Hancock, Darren Hill, British. Man, that's my guy. He's my dark horse. Come on, Darren. You can do it. Ivan. Here's crazy Ivan. There you go. I'm not getting. I apologize. I didn't mean he's crazy. He may be a super nice guy. But let's hope Ivan, John, and Matt. They're going to be my dark horses for this race too. They're all going to take out ICT. Yep, it's going to be demo money. I'll bet on that. So that's our leaderboard. No one's broke 100% and stayed there yet. So there you have it. We shall move them to the sidelines and see what we get next week. Robin's Cup. Okay. And Forex Factory's telling us at 10 o'clock we have ISM Manufacturing PMI. So the unemployment claims were a little high, not so good for the currency. $17,130, then up for the rest of the week. Hopefully, just hoping, guys, nothing's set in stone. You'll be up there in top 3 for sure. I don't know about me, but it'd be that'll be my goal next year to get into that. It'd be kind of an honor to be in there with Michael, just trying to chase the rabbit. But yeah, I got my theory of what I want to do it for. I want to try and get up as far as I can next year, and if it's fun every year, then you do it. I'll just try it out every year, and I want the world to see Michael's students. And I hope one of Michael's students goes up there and says, yeah, I'm an ICT graduate, and that's why I did it as well as I did, because the guy who won it last year or the year before, the Grand Master, the guy who blew everybody away, he taught this techniques. So then Michael's material is going to explode when he wins that competition. His material will explode, and then places like ours, if people want to come and practice that and come into a community of people that are willing to help you out and move you forward, not give you free setups. I'm doing that. I'm showing setups and stuff, but again, do not trade live money with this. If you do, that is entirely up to you. You know the rules. Same thing applies here. I'm not going to take credit for your wins or your losses, so they're all up to you. So if you win, that is awesome. I'm happy. You can tell me about it. I'm going to celebrate it with you, but don't give me any of the credit for it, because then you're going to come to me if things go wrong. It's all about that trading plan we were trying to talk about. What's your mindset? How do you set it up? How do you discern when your trade pattern fails? Look for the failure point as well as the success point, and see how the narratives, build several different narratives around where price could go, and all the time it supports the narrative that you're in. If you're in that trade, then keep going. And if it fails, either readjust your narrative, readjust how you build your plan. These are the things you should be making notes on. That's how you're going to refine your skills and get better and better at this stuff. At least that's my opinion. For what it's worth, that's my opinion. It's a demo opinion. So what's it worth? Right. And I tried setting my camera up. I've got my camera set up for when we hit 500 subscribers. You can see my mug for a while. Not that that's any motivation to get subscribers, but it seems to be the thing people do. They have the person in the bottom corner there. And I'm a very animated guy anyway. So when we start getting up in there, I'll do a little down in the corner. You'll see my mug down in the corner, me getting all excited and my expressions. Anyway, not that that's a motivation for anyone, but if we get up there, that'll encourage me to brush my hair in the morning, so you don't get to see, wow, I feel bad for that guy's wife. She has to wake up to that. My bedhead in the morning, all the fun stuff that you guys don't get to see. Okay, so anyway, let's get back to here. 15-minute. Look at this little 15-minute fair value gap here, BISI. Order block. It's the breaker that runs these highs. So now we've got the regular trading hours gap. Interesting. All the way down into the rejection block. And it's obviously, look at that. Look where it ends. It ends right on top of that imbalance, that 15-minute price imbalance, right on the 50 level. Right on the consequent encroachment. And we're sideways. Here's the news release. Dow Jones is doing an interesting little run right now. Look for a run back up into here on the hourly. If this runs up to 10 o'clock, back into the breaker, and then rolls over and comes back down for the next price leg down, we could see this. Revisiting this low here, or at least the rejection block. How's that? I'm gonna let that sit right there. I guess I'm not gonna get the we'll see if that's an objective. We also have a revisit of this inversion. We've hit it. Oh, maybe not. We haven't filled it. The high in that candle is 38,151. 38,157. So there's 6 handles between that low and that high. So we may get one more little run down into here. Back to the consolidation. We'll see if that leg, if it comes back up there. Anyway. What's our gold? Texas T, what's that up to? Still looking for it to get back up into here, or even the bottom of that daily fair value gap again. And we could see it hit here, roll over and come back down. But that's the area I'd like to see it freeze up on right now for oil. E-mini S&P, bottom of the order block, we trade back up into it, roll over or wick up into here and start coming back down. Well, that's the down. E-mini S&P, what's that one doing? Same kind of thing. I'd like to see it freeze up right here, come up just a little higher off of there, then open up Friday, tap this fair value gap, leave it open, or the bottom of this order block, and then continue back down. So if we do get the continuation, Friday is the one I'd like to see the reversal. So after non-farm payroll pushes it back into this breaker inside a fair value gap for a short. You see how that might be a really nice setup happening here for E-mini S&P, a lot cleaner than what we're looking at here in the NASDAQ. Although you could get a similar thing back into that. I don't think that actually hit where I wanted to hit here. I don't think it ran up there yesterday. I think it was already up there in the beginning of the day, but I'd like to see it run back up into that little area there, which is that order block. Now a breaker. We ran this low out here, so if we return back up into that breaker inside a, not a fair value gap, but a price imbalance. So same kind of thing here, which looks a little cleaner than this. But if we run back up into this imbalance, tag this order block, and then roll over and come back down to finish off the rest of the BISI and dig down deeper into here. We also have a breaker right here. Swing below this low, last up close candle, run below that low. So you draw that out in time. We're looking for some support. Once we get up here, looking for support around this area here. Does that make sense to you guys? That's what I'm looking at on the daily. If this was a minute by minute candle, that's what I'd be looking for a rundown in here. And what does that give us? Let's go a little bit wider on this. If I oh, 50% right there off the, that's interesting. We didn't pull this fib tool yesterday for this, so makes sense. We're looking at all up about here. Makes sense to get down in here, 50% of that range. Tagged it. Now we're getting a retracement. So if we do get a dip down now, look at where 62 puts us. Right in the breaker. And I'm going to get all of this stuff off of here now, because it's just cluttering up my screen. I'll deal with that if it gets down there again. Otherwise it's just a lot of clutter. I'll leave the weeklies on. All these guys will remove this stuff. I'll leave this piece on here because that would be the upside or the downside resistance I would expect. Old highs, breaker, inversion, fair value gap, breakaway gap. You want that to stay open. First one fills, second one you can come back to the midpoint or even the top of the second fair value gap and freeze up there. So if you're looking for a wick on the monthly, this will be the wick, and then the continuation up. What would that do for us for the month? Let's have a look. If we decide to come down, here's that level right there. That's 17,165. $17,165. that puts us right here, right near that breaker again. Well, I got my ideas set up for coming up for next week anyway. Michael not participating this year as well. Oh, Michael's definitely participating. S&P 500 looks like it could go hard up at 9:30 opening. Just gave you the first like. Thank you very much, Southie. Off grid. Currently it's 9:27. Can't see the upper chart. Can't see the upper chart. So, carrot. Drawing liquidity. I'm looking for the carrot down here for a downside. What would have to be overall? We would see a draw to the top here. So I want to see that stay open. We get a waffling around in here, open up Friday, come back up into here. Non-farm payroll drives us up for a downward run into the breaker. So where are we going today? Let's see if we revisit this imbalance, or if this just holds up and we create that somewhere in here. We create a fair value gap. That's a 1 day. We're going to use a 1 day price imbalance because that's not just a 4 hour. This is a 1 day from here to here. Yeah. Clean that up a bit. Let me get rid of that one. Remove that. Start cleaning up my chart so I don't have too much lipstick on this pig here. Okay. Let's start a new day with some clean chart here. Okay. Nothing there. So I've got an idea where the overall perspective is, where I'd like to see this go. Several different narratives that support upside and downside runs with a seasonal tendency overlay, pivot point, potential pivot point here, all in this little area right here. Layered in this stuff. Do we get some support here, and does this stay open? Line in the sand obviously is this order block right here. I'd like to, if I see this, I start to give up hope. If that gets eaten through, then I start giving up hope if we have to come all the way down into here. I don't want to see this low get taken out before we come back into the breaker inside the imbalance. See how that breaker's just tapping it inside here. So we come up, just tap that, roll over and come down, take out all this stuff here. So I'd like to see that form that fair value gap Thursday close below this, and then come back up in Friday into here. Or Friday just comes up, hits it, and then the next, no, that would be the day you typically come up, wick into it, and start coming back down. So Friday might be an interesting day with a non-farm payroll. We'll see what happens. That's exactly what I was looking at. Oh, I like the way you're thinking then, AB. I like the way you're thinking. Anybody else thinking anything different? And it's okay to be totally different, contrary. That's what we're all about, man. We're not all just gonna believe the same thing. So if you guys see something differently, or those guys who are new to the ICT stuff, are you looking at something different? Do you want to see something different? Build your narrative around that. Write it down. When you first start out, write it down in your mind. Or write it down in your mind. Write it down on paper, and then write down the levels. You know, if you're using this trading view, post your price tags here on the side at specific levels where you want your narrative to be supportive. Don't move them unless your narrative changes with solid convictions. Don't move this until you're ready. But like, that'll be my line of sand. If I go over that, then I'm out, so to speak. Build your narrative around that. Put little boxes in there. Screen capture it. Put it in a trading notes folder, so that you've said, this is my trading binder. Here's the decisions I made, and how they worked out or not. You go into this thing called Notion. Notion is a trade journal you can create, all based around ICT stuff. I like what they're doing, those guys over in Notion. It's like $20, lifetime thing, and it's an access to a journal entry that you can do tons of stuff with it. I don't get any kickbacks or anything from it, so it's free. No, it's not free. It's $20 or something like that if you want to get the whole thing. But otherwise, it's free. You can build your own if you want. Or you pay $20 for the guy who's already gone through all the work to build it for you, and you don't have to learn how to use Notion all over again. You just pick it up off the community tab I think they've got there. Morning, Cody. Cody's feeling strong today. I like it. He's right arming it. Strong arm in the market. Commandments. Write it down in your mind. Too funny. Write it down in your head. See, that's what happens with your ADHD. Your brain goes too fast and your mouth doesn't keep up. My mind's already on like 10 different things. It was hilarious when we got on calls as a medic. It's a good thing I had like half a dozen firemen there, because I'd bark out a ton of orders because my brain is already racing forward as to how this patient's going to be treated. So I'd fire out a dozen things. You do this, go, do all these things. And then I look at them and like, why isn't this done yet? And they're just turning and looking at me going, what? Could you repeat that? It's like, look, we need to get this and this and this and this done. You do this, you do this, you do this. Let me know when it's finished. So, yeah, write it down in your mind. Bang your head on the table, shake it loose, put it on paper. Wow, Robin still has not confirmed Michael's money. That's weird. That is weird. They're not confirming that his money has been sent. You figured they'd be pretty bang on with that by now. After how many years they've been running this thing? Wow. You got to be wondering that that guy's going to feel quite suspicious of anything, any shenanigans that goes on while he's in there, because he's such a high-profile trader that he's going to be suspicious of anything that's not going smoothly. And you figure if you've been running this tournament for as long as he has, that you would you'd have his money already. So interesting. Maybe it's just something that happened, a glitch that we don't know about. I'm sure they'll get it all sorted. I can understand his suspicion, though. I'm an inherently suspicious guy. I like to try and think. I'm trying to change my mindset to, I see everybody as wonderful beings, happy people. I'm trying to X out all the stuff I've seen in 30 years of EMS, firefighting. You don't want to. I don't want to go through the rest of my life imagining that that's what people do with each other. That kind of stuff happens all the time. Happy thoughts. That's why we're here. Trying to make some positive change in the world. Maybe they're afraid. I don't know whether Robbins would be. They're going to make a ton off that guy if they're mirroring his accounts. You'd want to get that guy in and set up right away. He's a big money maker. He's a big draw for people to your competition. He's drawing in tons of advertising for your global trading competition. So they're introducing thousands and thousands of people to this new Robbins Cup. People that have never even heard of it before are all being brought in on this. So you figure you would get him dialed in, considering he's like, I guess he won't be internet royalty yet. When he wins, he'll be he'll be one of those legends that people look back on. Right now, it's just the talk. It's like the big wrestling competition where the main guy you think is going to destroy everybody. He's the John Bones Jones of the MMA traders. So whether or not he performs and wins, we have yet to see. But there's great expectations that he will do exactly what he said he would do. But so you'd want to get him in. You want to get that guy locked in, because you know your viewers are going to go skyrocketing that year, right? So you have a captive audience for a whole year. Watch that guy rocket. And if he starts blowing the doors off of the rest of the people are really going to start to tune in, because they want to see how high he keeps going. So they're just going to keep drawing more and more and more people in. So yeah, I figure I'd want to lock that guy down right away as soon as I could. All right, we got another 7-8 minutes. We're going to start dipping down here into the lower time frames. Hourly, order block. We're already through this inversion. We're into this inversion right here now. See that on the hourly? So we're watching this level right here. We've got a stepping stone, right? Starting to happen. We have to break the high in order to break market structure, but I just want to see the stepping stone thing happen. And we're on the hourly, so you're not going to get a lot of joy out of this before this runs. But if we do get some support off of this, and we see a nice little run above this high here with a bold candle, fair value gap, this is my ideal narrative. So I'm trying to build a narrative here. That this is just a run down into the mean threshold of this order block, this breaker here, right? Last down close candle before run above this little high here, because there's a swing point there. So we run above that high. It creates there's a fractional fair value gap right there, whatever. There's definitely one here though. So we return back into it, into the order block. Breaker inside of fair value gap. Hello, let's go long. So you'd want to see that continue up. That's the narrative I have here for this one to continue up to. Again, when you're doing a super snipe here, what am I in? I'm in NASDAQ. I want to make sure I'm in the NASDAQ. So super snipe up, you want to get 10 handles out of this. Off the mean threshold of that candle. Or we find some support here. Look at the range you're in. What candle do you want to start running back up to? You're really between these two candles here. That one might be the higher one. So mean threshold. They already validated all of these, opened, ran all through them all again, back to the rejection block, and then back down here. So really small little range. So if you do see a run up, I want to see it get back into here. So 29, yeah, it's still 40 handles. Still 40 handles from there to there. But that's the hourly. So let's dig down into the 15-minute here. Let's see what we got here. Okay. Look at this down here. That imbalance, gap. One side only. So we've got a gap sitting in here. We've just wicked into it once. So if 10 o'clock rolls down here, takes this lot out, back into this gap, or you could run into it. This mean threshold has not been hit yet. So if we run into the mean threshold of that candle, which is right there, just below that guy, or we take these lows out, yesterday's PM session lows, and then start to run back up above a little bit of candy land up here in a 15-minute fair value gap inside that breaker right here. So mean threshold. So there's lots of little nuances I see in this one. So let's see how this 10 o'clock rolls. Here and here, that's where I'm looking for a run on liquidity, and we'll see if we get reaction off those. Again, non-farm payroll. Don't look to try and make bank off this, because this could be a slaughter. There's plenty of year left, plenty of year. Sometimes, like Michael says, sometimes you don't have to, your discipline and how good a trader you are is knowing when to stay out of the markets as well as when to get in them. And if we call these, that's great. It's just practicing our skill on reading the candles and building a narrative. Write it down in your mind again, because you may have slipped your mind. Write it down on a piece of paper and get it something visual. Bring it into reality. So whatever's in your head, bring it into the real world by putting it on paper, and then you get to see your narrative and then walk through it. And when it fails or when it succeeds, look at your narrative and say, did my narrative support every candle that I was studying? And if it doesn't, and it starts to fall apart, and you end up saying, I'll give it that one, go back and double check it. Because if you just go, meh, and kind of let it go, that's the time when you're going to get your butt handed to you. Cody, was watching a documentary this morning on National Geographic about a plane crash near Detroit Metropolitan Airport in 1987, and was a lot of firefighters and paramedics. Do you remember that, Darren? 1987, Detroit. Oh, is that the one that came in and you see it skipping down the runway? You just see it come in and just kind of rolled over and went into this big ball of fire, and people were still alive. I think that's the one. I remember seeing the video on that. And people were alive, still survived that crash. It was a giant fireball, but yeah, I think I remember that one. We've done scenarios like that in, I think every major city's run scenarios where a plane comes in and crashes, and all of a sudden you have, 100, 200 people, and how that can overwhelm your hospitals, like instantly, one plane crash. Because now you've got, if you have a 3 trauma bay hospital, triage center, like a trauma center, and suddenly you have 150, 200 trauma patients all at once, wow, your hospital is in some major trouble. So you have to practice that kind of stuff. So for us, you really got to get your skills up, because a lot of times I've spent 17 hours in a hallway before, and I know friends of mine I've gone through entire shifts waiting for the backup to come and help us while we have a patient sitting in the hallway. And I know guys have been in there 27 hours. They've gone home, come back the next day, and take over for the same patient they brought in, and they're still sitting in the hallway. So I'm hoping they got that sorted out. My guess is they don't. They never had that issue sorted out while we were doing, because you can't turn over care to just let it sit there. They've got to have a doctor or somebody more higher qualified than you to do it. And no offense to the nurses out there, there's not a lot of critical care nurses that have the right to give drugs unless they have standing orders, and very few nurses have standing orders to give drugs when the doctor's not around. So we have to stand there and continue to give morphine, continue to, you can cut a hole in someone's throat. You can needle decompress a chest. Nurses can't do that unless under their special circumstances, critical care or whatever. But the regular nurses that sit and emerge can't go sticking holes in people's throats and chests and stuff like we can. We don't have to ask for permission on that stuff. We just, if the opportunity arises, then we go ahead and do it. And I've only done one in my career. Taught it lots of times, but only ever done one. And there's no glamour in it, let me tell you. Michael's post is right on to what I've been watching all this morning. Is Michael saying the same thing? Well, that's good. It's nice when you line up with the boss. Yep, in some bridge. Kinda, he is not even started to fly, unable to go. Oh, that one. Yeah. I remember that one, because they kind of trimmed all the trees at the end of the runway, didn't they? Or hit a bridge, and they rolled over into the Potomac, and people were popping up, and they were covered in jet fuel, and they were blind. I remember seeing that one. It was in the wintertime, wasn't it? Yeah. Morning, Alley Cat. Or Algo Cat. I'm calling you Alley Cat. What's up? Did I miss something? Now we're just talking about trauma and airplanes and paramedic stuff, firefighting stuff. Where's my buddy Lauriston? Laura, he can come in here. He'll give you some good feedback on some interesting stuff, firefighting. I got stories up the yin yang. And I know you guys didn't tune in here to listen to me babble about my paramedic stories, but That's why it's my channel. You're going to hear him every once in a while, waiting for price to do its thing. There we go. Look at that. We're looking for in here again. Nice reaction off of that at 10 o'clock. Now we start to dig down into the 1 minute. Here we go. Looky, looky. Do we have a fair value gap forming here for our first official run above here? Are we getting into our first silver bullet on the turn at 10, right off of a low that took out and right near the bottom of the regular trading hours gap? People, can you see this sitting right here? Load the gun! Load the gun! Don't know how did you do your job, how you overcome fear of seeing like open wounds and things. Dude, that stuff never bothered me. Do you know what bothered me? I'll be honest with you. What bothered me, and we're just going to play with this. Actually, no, I've been telling you guys not to trade this, so I'm not going to trade this. But there's the silver bullet right there. This is that one where I would take a silver bullet like this before the 10-10 if it doesn't take out this high first. If it takes out that high first, then comes back into it, I'd have to wait for a cleaner setup. So I'd like to see this kind of roll over here now and come back into here. 7 minute candle right into that. Loaded already. How far the bullet can go? What do you think? 17,440? Is that what you're going for? 17. Oh man, you're really running out through PD arrays. You're ripping through a whole ton of them, my friend. 440. You're looking all the way back up there. So be careful that you, again, make sure your narrative supports upside run. So look for, instead of looking for way up there, look for, oh, he's not going to get it. You don't even get that one. That's okay. I didn't want the 7 to be here. I wanted the 7 to be down. I wanted that candle inverted. It's not. So I'm going to wait now. So just my idea, Southie, if you've got an objective up here, 744, I haven't seen one up there that I'm looking for. I'm looking for something like just cleaning these highs out here, that fair value gap there, cleaning these highs out. I'd be looking for those because it's such a volatile market. And look at all the chop that's going on in here. I would look for just these things to start taking off a piece of my trade if I could. Now, when you're trading this, you can only trade one lot, so I would manage it from the back end just to try and chase these specific ones. And if the narrative changes, that I'd lose an area that I expect support to happen on, then I would obviously cash out. But if you're aiming for way up here, you're getting through, and if you're trading on the 1 minute and you're aiming up here for your objective because you think there's a clean run up there, then good for you. Go for it, man. Here's a price leg. See this price leg right here? you got to be careful that you don't overshoot your PD arrays too. And again, that all depends on your narrative, I suppose. You like to look for a bias and then trade that bias to the upside. So we're looking to take these highs out here. Uh, 17,440. What's up at 17,440? 15 minute. 17,440. 17,370. The rest of that fair value gap that hasn't been filled yet, that would be my upside objective on a 15 minute. If you're trading on the 1, aim for the 15. 17,440, you're way up there. Yeah. What is your objective? What time frame are you trading on there? Because even the mean threshold of that candle is not even near 440. So there's a bunch of PD arrays that you got to get through that can still turn around price back the other way. So my advice, for what it's worth, be careful about how many PD arrays you reach for. Again, I have no problem with you reaching for that PD array. Just make sure that your narrative is continually supportive in order for you to keep that price in mind. And if it's not, have your plan in your plan, have it written down that what the failure points are going to be for your plan. And if you're on the wrong side, how do you get back on the right side? These are the kind of plans you have to build either in your mind really quick. If you practice it enough, you can just leave it in your mind. But best to put them on paper with specific levels. Anyway, that's my first little area that I'm looking for the 1 minute. So I don't understand your 17,440 Southeast. Not that it's a bad idea. It's just I'm not sure what it is you're aiming for. Yeah, I don't ever think that I'm here to insult any of you. I am never, always know what my intent is. This is what the big thing about relationships too. You know, if you know that your wife her intent is to always love you and always take care of you, you should never get offended by anything. If you know her intent is to be loving and sometimes she says something to offend you or you get upset by it, you say, is that her intent? Does she ever really want to upset me? Do you ever want to hurt my feelings? No. Then it's me with the problem starting out. Let's start out with the intent that you believe that she's delivering it with. And then it softens it. And then you say, I'm not sure I understand quite what you mean by that. Blah, blah, blah. Anyway, I'm not getting I drift off into relationships. But this is the kind of thing I want you to understand. My intent is always to love you guys and do the best thing for you. I'm not peacocking. I'm not trying to make you feel bad. Always know that if you get offended by anything I say, just ask me and know that my intent is never to offend any of you. It's always, always, always to make sure you guys obviously the best trade I can think of, and I could be wrong. And I really, really, really honestly want you guys to succeed in any way you can. So I'm never judging you, ever, ever, ever. Know that. And when in doubt, refer to February 1st at whatever time we're at in our video. So you can see how we're already past the 10. We've already run these highs out. So now I start getting suspicious and go, all right, could this just roll back over into here now? We're at non-farm payroll again. We didn't quite get, look how close we were to getting that first silver bullet. Didn't get it. We've run these highs, the liquidity here and here, originally where we're aiming for. That price leg from there to there, extended up. That's ideally where we want to go. And now remember, like I've mentioned to you before, when you take a price leg, that's the extreme. and always know that you can be within that or just outside of that. Now look at the PD arrays that support a price level there, and you say, well, that would also, that London high we were talking about, fair value gap, has yet to be filled. So now you want to start seeing, okay, now we've got a run below consolidation, the price leg that takes out the low. We've now broken high. We've got a fair value gap in here. I'd like to see it come back into either 50% of this or find the breaker inside this stuff that finds support. So over here is a little breaker for a run below the lows here. It's the highest one that I can see right now. We have inversions that are happening now. So because this would take me some time to sit there and process all this stuff, and I don't have really a trading idea. I'm kind of getting lazy right now because you know how I like to trade every single candle. Right now I'm just kind of watching it and getting a feel for where it's. So keep your eye on here. Build out your chart here and here for your inversions. See how they're supporting price, if they are, if the bodies are they trading below them or not. I want to see this start to come back into here now, into this range. Pull your FEB tool from here to here. Find out what PD array supports a discount array. If that's all premium still, look down into this guy down here. 50% of this leg that takes out the lows. Look at that. Look at 50% of this consolidation. Look at the top of the consolidation. Look at this next price leg up as an extension, and then we could start getting into something that Southie was looking at here. We might be getting closer to the range for a if we get, and then this is how I kind of predict you can use this tool. So if that's a price leg and you said, if I base it off of this candles, look at the ball I'm pointing at here, look at where I'm pointing, that right there inside that little inversion fair value gaps. Now if it came all the way back into there, there's an upside price. If it came all the way back to that right there, that's the upside price, upside expectation. If it doesn't, if this is actually the low, like the swing point, and we start to break that high, expect that range. So 40.20. So you're getting close to 17,440, but you wait for the price leg to finish forming first, and then if we get, as soon as we start getting a break above it, and you look for this little notch back, look for that next price leg to be the run up to wherever you're aiming for, and that would be like an upside objective for quite a few handles. You know, that's 90 handles there. It's 90 handles from there to there. That's huge. That's a week's run right there if that ends up pulling out. If we don't, if we get a run back into this order block, it's still 90 handles. Anyway, you look at it, this 90 handle run we just had from the low to here, if we get a run back into here, anchor off the low, look up there, and then pull over and see over, look over here and see if that level is supported on a 15-minute time frame. Ah, crap. What did I just do there? I have no idea where that is. I should have anchored that. Stand by. That was a 15-minute one, wasn't it? Yes, it was. There. Let me anchor that. Lock that in place. Lock. 15-minute order block right here. 336, and the body is the bottom of the inversion, or bottom of the fair value gap, not an inversion yet. Get down to the 1 minute. That brings us right back into here. if this stays open right now, breakaway gap, measuring gap, let's see what we get here. I agree with Darren on the time frame you're trading. Myself, I'm looking for the 17-120s to 30s on the daily. Doesn't mean I ignore the minute chart going up. I like, yeah, 17-120s. 17-120s on the downside. 20s and 30s on the daily doesn't mean I ignore the minute going up. Yeah, see how we took out that low before coming back here? So now we've got that little suspicious run. If this rolls over and goes through here now, and we get back into here, and through this consolidation, I start to lose faith in this run up when I start to see this consolidation start to give way, and then the line in the sand is the 50% of that leg that takes out the low. If we lose 50% of that, we're going down, and that is hasta la vista. So as you can see, back to the order block. So I just kind of chase this thing down. Not that this is a method that you use. This is kind of like a little cheating thing I like to use every once in a while to see if this is if that's actually a price leg. A lot of price legs I tried never come to fruition. So you wait for a reaction off of that, find some support on it, like an inversion or something like that. Then I go, okay, we might actually have something here. And then that's kind of roughly the range. And then I look at something like this and I'd say, what's an institutional level? Is 409 an institutional level or 400? It's a big figure level, right? So that would be, I would aim for the big figure level. Take a chunk off there, like a big chunk off there, in terms of that price leg run, if that was what I was aiming for. And right now, you see how it's kind of given up this one, given up this one. So we're looking for a return back into the first original silver bullet entry and see what happens off of that. I'm getting rid of that idea right now. And then we'll see what happens. So we have a return to the top of the gap, which has already been pretty close to being filled. Probably a handle or two in there that hasn't been touched yet. So here's your line in the sand off this breaker. If we lose the mean threshold, which is also the mean threshold of this block here, or whatever that was, I think that was the 1 minute. No, that was the inversion or price imbalance, I think. That's the problem. You don't have these little tags telling you what they are. But either way, you've got the regular trading hours gap, mean threshold in here somewhere. That's below the threshold, mean threshold of the breaker. We have a breaker inside a fair value gap. It'd be nice to see it dip into here, get some legs, and start running back up. So if you're looking for a quick trade from here back into a premium array inside that range that it's creating here, a run back up into these old lows, a little tiny fair value gap right there, that would be your right there. So big figure level 17,300 to 330. There's 30 handles right there. 15 minute. Find some support here, roll over, come back down. Inside this little guy here, there's one right here. Cody's looking at a 3-minute chart. Good man. Yeah, everything that you play with, any chart you play with, you're just going to see the same setups that we're looking for, no matter what time frame you're comfortable with. It's all fractal. How many of you guys out there feel like pulling the trigger even on a non-farm payroll week after Wednesday? How many of you guys still want to engage the market? How have the strong desire to engage the market? Just out of curiosity. And do you feel it's like an internal struggle you have when you look at the charts and you see these setups kind of coming in and you say, I could just nibble 10 handles out of that? So you see how my narrative wasn't starting to pan out? We didn't get back to where I wanted to get. So now I go, okay, so why did that happen? Okay, it happened because I didn't look at the 50% right here off those little order blocks. They held price, and that's why it's back up into the premium level again. And it just bipped below that 50%. So I will instantly, when I see that my setup is not panning out, think, well, I wanted it to come up to there, bounce off of that, and then turn around and come back down. Why didn't it? Why is it starting to run through here? I go, okay, oh, okay, there's the range. It looks like it's in the middle here. So, yep, that would be a logical level for it to potentially bounce off of inside those order blocks. Yep, I didn't call that. So, okay, makes sense. Back up into order block, tippy tappy. Now, are we going to roll over and come back down, finding support in here, or are we going to start to eat through that and start running higher? Then this will be the price leg up. Then I just go like this. And 17,402, which is 17,400, would be the area I'd be reaching for. Does that make sense? So we're still going long. Wanted to get here to see what would happen in terms of, is this a really super deep retracement? That makes sense. That was 50%. Makes sense off of order block. Now you just want to see this all give way here and start to climb up through here. And then you're running for 17,400 for me as a price leg. I hope that makes sense to you guys. And then if that narrative doesn't work out, I've got to start building and say, okay, well, if that doesn't work out and it starts rolling over on me again now, what could I see? What am I expecting to see? This is not a passive sport at this level on the 1 minute. When you're really looking at trading super sniping, you have to be very diligent to be watching the story that you're trying to create, your trade. And this the most detail you can make your trade, and build in some flexibility, build in some fudge factor. It might seem like a lot of work, but it is. It is a lot of work, especially at this 1 minute level like this. Because if it just turned like that, like it just did, and I was like, oh, okay, well, I changed my mind. It's going up again now. I got to know why. Otherwise, I'm just going to let little candles like that go for no reason. And that's where I run the risk of blowing an account. Believe me, I've blown mucho accounts with live money. %. You want to get in, no struggle, must do. Okay, this is 0.5 to 0.25 trades, and I'm okay. Yeah, perfect. So keep your eye on that level, the 400 level, big figure level. 15 people. I remember the day when I'd be lucky if I got 5. Look at this. We got 15 people in here today. And 150. Wow. I didn't think I'd ever get this far. This is great. It's really, really good. So you can see how this range here, we came back to 50%. Now some of you might have said, in my trading plan, if it comes back to 50%, I'm going to go long here, because that's 50% of the consolidation, I bet. Let's go in here and find out. Let's find out, he says. Let's go to the beginning of it here, to the top of it there, and say, where's my, that's the range I consider that consolidation here. From there to there, and oh, looky, 50%. Remember I was talking about if it's 50% of this range or 50% of this leg, if you lose 50% of the leg, then I'm downside on a close, and it didn't even reach it just reached 50%. So we said one high, 50% or 50% of the leg. There you go, folks. I don't know how much more nicer you can get it than that. So those are the 3 things I look for in that level. So if you were going to trade 50% of that consolidation and you said, I'm going to put my stop loss below this swing point here, or sorry, this BISI, or here, and you want this to stay open, if it comes back and takes you out, then that's past the 50% and it's past 50% of this. If you pull 50% in here, here's how you can look at your the leg that took out the low. There's 50%. So if you say to yourself, if I'm going to put my stop loss right there at the bottom of that inversion, sorry, not inversion, that BISI. So enter here, put it here, and if it comes down to 50% and you take that, that's great. Your stop loss is still here. Anyway, different ways that you can build your narrative around that trade. Now that we've taken out the highs and we've finished filling that fair value gap 15 minutes, so you should be taking off a portion off there. So from here, 14 to 71, you're looking at 50 handles right there. 50 handles, guys. Man, oh man, 50 handles just paid you a big chunk of change, even if you're using a little low leverage. That's some good money right there. And again, we're not trading it, but we're just kind of building the idea of how to build a narrative, how to build a trade idea when it wasn't working, when I expected something more. I didn't see, because I didn't pull my FIB tool, that was a possible. I don't know if I talked about that, so I'm not going to take any credit for those two. I don't remember if I talked about those coming back to them, finding support at them. But anyway, 50% is what I didn't see, didn't pull the FIB tool on it that time, but we did get the leg, and we're looking for that higher time frame. So we're looking for this guy here to provide a level of support. That order block now is the propulsion candle. We want that propulsion to hold and continue to push price higher for our institutional level. You want it to continue up from here. Mean threshold, you don't see it close below there. I suppose it could dig down into here. If this is the breaker, you could get right back into here. Look at your FIB tool again on the little mini range that we just got here. I love pulling this FIB tool all the time, as you can tell. So 50% puts us right back in there as well. So, and it's inside that breaker. If it's got some legs, it won't even come back here. Just tag that and off she goes. Unless you want to get back, gather up some more orders, and then go. So again, you're looking for reasons to support it. So for me, if I had a stop loss that was down here and I got in here, I put my stop loss right up in here now. I move myself into some profits, and that would be my line in the sand. If you see it starting to go through that, it's not the only logical place for it to come back to is the bottom of this inversion fair value gap now. Well, almost inversion. It's the fill of the fair value gap. When we get on top of it, different story. So that's what you're looking for now, is to get on top of that and start running up a little higher. So even though we're looking for this to continue down on the daily, you can't support a daily run down yet when the 1 minute's still moving in this direction, and we're super sniping on the 1 minute chart. So even though we're contrary to what our overall bias is, that's why you got to be super nimble, because when you're playing around, and especially in a situation that's different from what your overall narrative is in terms of your bias for the day or the week, then you've got to really play nimbly, if that's such a word. You're going to be super nimble. What is your funded account? Did you trading that? Any trades? Yeah, I took a trade yesterday, and I'm not taking any more trades today. I'm not taking any more trades this week. I got plenty more opportunity to keep building that account. I'm in no rush. No rush at all. And I think it was AlgoCat that got his Fiverr account yesterday. And you don't want to be blowing your account in this kind of environment, even though it looks relatively clean setup. It's still that time of week where you train yourself now, even though you can still see little trades pop up. Train yourself to calm down and wait till next week. If you still feel the urge to get in and the emotions are driving you, that's the thing you got to start getting under control, because that's the little devil on your shoulder telling you to get in, get in, get in. And then if you get beat up in it, you start beating yourself up, and then you've got that battle inside your mind. Just wait for a nice clean day. And if you make a wrong decision in a clean day, again, you just have to refer to the narrative that you're building and not an emotional drive to I got to put a trade in. I got to put a trade in. And believe me, I know what that's like. There's lots of times I'm looking at this going, I'd like to put a trade in there. Nope. This is the psychological part. Now imagine being in a Robins Cup tournament, and you're feeling somehow you manage to nail a really good trade, and it puts you out in first place. You've got all these people watching you. You've got all the pressure of being in the cup. You're now in first place. All eyes are on you now, and you feel the desire to get into that trade. You think about all the things that are going to build up inside your mind that's going to force you to make a trade, and you see things happening where these guys were up 100 and some odd percent, and now they're down to 50 some odd percent. Are they feeling the pressure of Michael's coming? I've got to really start pushing this up, because if this guy blows it away, nobody's even going to be looking at my number, right? When you should be just entering into the competition for, you're only competing against yourself, not Michael. Michael's competing against the world. Just look for your personal best. That's what I'm going to do next year. What's the best I can do? Can I get more than 5% plus? Can I get my money out that I put in originally? That would be my start. No one's going to be watching the ThetaWaveTrader next year. So you get your anonymity is good. Someone like Michael, there's millions of people going to be watching him. 15 will soon change into 1.5. Wouldn't that be nice, eh? If you had 1,000 people, man, I can't imagine somebody having 1,000 people. I look at Tanya Trades and Hydra. I love what they're doing. They're doing a great job. So I recommend anybody check those guys out as well. They're good. I love what they're doing. I fully support anybody who's going live and trying to do this live in front of people. We all have a different way that we approach it. As you can see, I'm wearing a one every minute, build your narrative, support your narrative on every candle. It takes a lot of mental capital to do it and focus. And you can see how if you just miss one moment, like that 50% we just looked at, you don't see it, you miss it, right? Or you catch it on the wrong side and you went, oops, so my stop loss just got taken because I didn't see XYZ. And then if you're on a higher time frame, you got more time to think. You're spending less emotional capital and mental capital. So there's a lot of people out there trading different styles. We're all trading the same kind of setups, all the same kind of fair value gaps and blocks and so on and so forth. It's whatever style kind of suits you, right? But 1,000 people, those guys are getting 1,000 people turn up to their views are like 15,000, 20,000 people. Like, that's incredible. I love it. I really am excited for them. And if we get there one day, honor. Nothing but honored. So see if that propulsion candle holds price now. We said it could come down as much as 50% in that, inside that little fair value gap there, still inside that breaker. There's a 2-minute breaker there. So that popped in there. Now, does it give way? When we dig deeper, look at that right there, draw across. Now, look for 62%. $62 is right here. There's a little tiny one here, but we're through that breaker. We're starting to eat through that breaker already, right? So does the wicks do the damage? We're going to see, does this close below this point right here? So we'll see where that closes in the next 30 seconds. The wicks do the damage. The body closes above. I'm all right with that still. Still solid for a continuation on the upside. And we've dug now into a discount array. The deeper discount array is right here off the bottom. There's nothing else left other than the fair value gap here. Sorry. The breaker. We come back and tag that. There's the close. See how they closed right on the inversion? We pop through it. Now you want to see it get on top of it. Find some support. Start climbing again. So we allowed this propulsion candle to give way to a 50% of that run. Actually 62% put us right on the money right there. So now I would like to see that just continue to move up, getting above here and staying above that inversion now. I guess you could allow it to come all the way down into here, into the breaker again. I'm wondering if this is the same version of what we just talked about earlier. Can you guys see this? consolidation, leg that takes out the low, run back up, come back into consolidation, 50% of that consolidation. Watch this. If I pull this from here to here, this is the same exact thing we talked about over here. Repeat, rinse and repeat, same thing. We'll see if this is, if I'm close here. I could be talking out of my butt, for what do I know. There's your consolidation. 50%. No, we actually did get below it. We start getting into this leg. So now, if we don't hit that high and bounce off the high and go up, and we take out the midpoint of the fair value gap, sorry, the consolidation, we're looking for a discount array. The discount array is actually, it makes more sense that you wouldn't bang off the top of this unless you were really strong and just kept running. But if you're just in a non-farm payroll week and we're getting choppy chop, deeper discount array, price leg 50%. If I lose that 50% of that leg now, then you start thinking, wait a second, maybe we did not get the 400 we were hoping for, and my narrative changes. So I got to be prepared for that. So right there on the 50% of, sorry, 50% of the leg, which is right there, we can wick below it. I don't want to see a body get below that. If it does, then I start to change my idea that we might be going back lower. And this is when you get to find out all those people who are willing to sit through this stuff and watch and study, or they just go, I'm done, I'm bored, and move to the sidelines. This takes a lot of focus to look at these 1 minute charts and hold on to your narrative. You leave 5 minutes of 1 minute charts, and that can really change your narrative really quickly. So you've got to stay staring at these charts and holding on to that narrative, or whatever your trading plan. I keep saying narrative, but your plan, whatever your trading plan is, when you want to enter, when you want to get out. So I will be back because my coffee is calling. I will be back shortly. Interesting. So we have a body, trades below it, right there. See that? That body closes right there below there, pops back up, finds some support in it, and we're starting to drop down. So now you give up on that idea for the large number or the big figure level, back into the consolidation. That's why you take a piece off at a fair value gap. So if you're aiming for that and you didn't take a piece off there, then you've just now got back and lost all that profit. Got to be super nimble. Got to be nimble. So that's the rule. As soon as price closes below your inversion, it starts tipping its hat towards, oh, this could be turning on me. Body closes below, trades back into it, and continues to move away. So now you may say, well, if it was just coming back to fill that fair value gap there, again, like bang off the bottom of it and then start going back up again, if that's where you put your stop loss just below there, then you take your loss. You take your stop loss out. But hopefully you paid yourself above the highs and then the fill. And that was still 70 pips, 70 handles. 13, yeah, almost 60 handles right there. Now we broke the lows. Now this breaker becomes, we have a body closed below this breaker. So now AB is up on deck, swinging the bat. The idea for a continuation on the downside now. We're spooling the 1050. Look at that 1050, that candle started, and we started spooling on our macro. Lori, buddy, are your ears burning? How's that for a firefighter joke, hey? Were your ears burning? We were talking about you this morning. One of my firefighter buddies, we're talking about if we sat around, we'd have a ton of stories. Maybe I think that was our daily high. What do you think? I think you're right, buddy. AB, I think you're right. Now you're batter up, man. See how it's starting to really eat up there now? That breaker, we have a body trade below it. And then what do? We trade back up to it nicely right there. Right off the bottom of the breaker. Now we're going short. So now the narrative is switching. The guys on the hourly don't see that, but you can start seeing that here on the 1 minute. Or my buddy there, Lauriston, he's probably sitting in the 15-second or 5-second and said, dude, I saw that ages ago, that change. Because when you get down to the 15-second chart, let's go down to a 15-second chart, for example, and see this switch up. It's the same kind of area. So overall, you'd say as soon as that area gets broken, let's go down to a 5-second chart. See if there's anything in a 5-second chart that would support a change in price. Let's make this a little bigger. Consolidation, breakdown below right here. See that breakdown below? There's the breaker, runs above this high. Consolidation, breakdown, come back up to the breaker, inside the breaker, body's respecting it. Look at that, right on there. Draw that all the way across. Supports price right there at, and if your stop loss is sitting right up here, when you see this consolidation break down, come back up into it, find support at it, or do our, watch this, watch this. This seems to be our theme of the day right now. Oops. Oh, it's not doing it. I have to do it this way. There's my stuff. There's my price leg that takes out the high. 50% of it. Is there validity in what we said? Right? Price leg takes out the high, 50%, gets short right there. Small little two-handle stop loss or drawdown. Stop loss is up here, and now you're starting to run. So there is your pattern right there for setup for the same thing we've described 3 times now today, is the consolidation on a 5-second chart. If you're not impressed by that, I don't know what is. I don't know what it is that we need to do to impress you, but that's Lorson probably saw that up here, and he's going at 10:37. Like, dudes, you guys are like hours behind the change, man. I saw this coming a long time ago. And now we're seeing this break here. Over here. So 10:37, he saw that almost 15 minutes ago, 20 minutes ago. You still fighting the flu? Man. Sorry to hear that. Yeah, Derek's having a rough time with it as well. He's got the COVID. He's got the bug. So he won't be back with us. Hopefully next week he'll be back with us. So I'm sorry you're feeling bad, buddy. It's a good time to have the flu, though, during a non-farm payroll week. Next week, you got to say, hey, look, enough is enough. Bug, get out. You're being evicted. I got to get back to work. Got to haul in some pips. Handles. So AB, we got your idea is far more feasible to me now that I've seen this right here. And we saw that one candle there trade below that low. Then I go, no, that's a breaker now. Now if we trade back up into it, technically you could get short right there. Stop loss would have to go up here. You're running for your first low down here. See how that price leg never came to fruition? So sometimes my ideas of price legs don't work. I'm all right with that. But I'm not banking on that level. You see what I'm saying? It'd be nice. And then you start scaling out at logical levels. And then when you trade, you think, I don't want to see these. I'm going to say, what's the range? What's a lower discount array that I'd be willing to not see, or willing to see price trade down to, but not through. So let's use this as an example. So your idea would have to be, all right, I'm looking for a discount array. Well, this guy's still premium. This guy's still premium. So the only one I got left is this guy right here. Right? So I would allow it to come down into that. But now you look at the breaker up here. We were focusing on the breaker. You don't want to lose the breaker. And if you do, then you start to go, it loses its strength, it loses its luster. So you want to see the 50 hold. It didn't. We traded through it. Unless you look at this one and you say, well, it traded through that. No, I'm definitely out. When it comes back to it, I'm getting out there. Offset some of my loss. Unless your stop loss was here and you're just got to eat a big chunk of it. Your profits went. But look for a discount array that you're willing to let it see come back to, and if it trades through it, Get out. Move to the sidelines and wait. There, we've taken that low now. Off of a perfect entry, if that was an entry. Now we're starting to really push. So is this just another one of those? All right, well, we've taken out that low, we've taken out that high, seek and destroy on the 1 minute. Now we start pulling back into this range again, and that's the whole side-to-side motion on the old infamous non-farm payroll week. And we may not see those big dive downs that we were hoping for or expecting until next week. Would like to see indications of it going along. Yeah, this would be a nice little turtle soup if you were bullish. We finally closed in that regular trading hours gap. Whatever little fraction was left is now completed. So you saw that this breaker here, the moment we got below it, we traded back to it. Now this breaker here, well, it's not real. Yeah, I guess it would be a breaker. There's a swing points, multiple swing points here. This breaker here, we've only wicked below it. No body yet though. So stop run, or are we getting a body there, come back up into it, either the wick or the body, and then continue short. Now the high of it will take us into a small little fair value gap here. Order block, mean threshold. Or when I say mean threshold, consequent encroachment, I have to keep correcting myself on the right terminology for the structure I'm looking at. Yeah, I'm still kind of heavy here. It'd be nice to see that pull back into the range, into 50% of that range. But I'm still kind of heavy right now. We'll see how it reacts off this regular trading hours gap and off that breaker right there. Right now, we're coming into the body. The wick went below. That validates it. Now we've come back up, hit the body of it with that candle. I wouldn't want to see the mean threshold get taken, and the mean threshold of that candle, or the consequent encroachment of that inversion now. There's a lot of overlying area of confluence of support I'd like to see right here for continuation on the downside. Now if we blow through this breaker, this is just a stop run, then again you're looking for another retracement back into this range here. So that's my narrative. The idea that I want to see each candle, what I want to see each one do and support, and where I expect the failure to occur to run back into the range, and support for the continuation on the downside. Look at this. Retracement back up into it. And then that price leg down. See how the price leg start is finished? Is this the swing? Do we get a retracement? And again, what I did here that never came to fruition, but it did aim for a logical place to fill, 15-minute time frame. That's where I'd look for here, and then look for something on the time frame down here that would support a run down. So let's look at this. This might be really premature here, but we'll see. I'm going to place it right on top of that breaker there. So 17,200. It's 11 o'clock, taking out 10. Yeah, this could be a run back up, Lori. Now that I'm thinking about this 11 o'clock, take out the 10 o'clock low. If this is just a stop run, watch for this to give way. If this isn't the next price leg down, look for the run back into this range again. Now you want to see these order blocks provide a level of support. You're going to be banging around through this guy here now. So we'll see how if it starts to get eaten away. Then you could say, yep, Lori's on the money. Consolidation, break above, come back in, top of the consolidation, start pushing up for higher prices. Two different narratives, one down and one up. %, puts us right in here. 50% puts us right back into that little inversion there now. Mean threshold of this candle, holding price, mean threshold, that area we talked about, overlapping PD arrays and all that stuff. That looks like it's holding right now. So that candle there, I look there. Let me make this a little bigger for you. Make it a little more sexy. So we're talking about this being the overlapping area, the mean threshold, the middle of this. We talked about all that. We talked about this guy. Now that guy is we've hit the mean threshold. We've hit the body actually. We wicked up, but we've hit the body of it. Body's being respected. Mean threshold's being respected. This order block is a play now. We're back to this guy and that guy. You're stuck in the middle here now. So where do we go? That's when you're watching it minute by minute. Now you start to say, all right, is my narrative to go long supported? Yeah, right there. Is my narrative to go short supported? Yeah, right there, short. So you wait. You wait to see which one gives way. Does this become the pivot point? And here's my downside line. Or do we find support off of this guy, climb up above here, come back and find support of this candle, and now we start to climb up again. See, two different directions. You can support either way, so what do? Nothing. Unless you're Lori and he said, I knew this was coming a long time ago, and he's already in there. He says, I'd like to see indications of it going up, going long. Well, there's the first indication, but we got to get through that. So revisit the mean threshold again. See that? That right there, mean threshold right there. Holding price. Wiki. Line in the sand. Inversion fair value gap right there. Draw that little guy out. We got lots of little resistance points in here. So if we get a nice clean bust through this, then I like further upside. If not, that guy holds. I expect that to be the next price leg down to the next objective. If that's the price leg. And if you're new to the channel, as usual, if you like what we're doing, hit the like button. If you just lets me know if you guys appreciate what it is I'm doing, kind of gives me some feedback. Nobody puts any comments in the bottom of the thing there either, so I don't know if you guys can actually put comments in the YouTube channel. I thought I had them in there as people are allowed to speak their mind in there. And if you're new and you want to subscribe, it'll be our pleasure to welcome you into our little community. So some people might look at that and go, oh, it's just a mess. Well, I can just see it's stuck between two PD arrays right now. An up one and a down one. So I want to see this go right through that candle. And get a body below that low. And we got further downside. That's a good thing. See how the body closed below the mean threshold of that candle? I like that. So again, we've got another little lean towards the downside. Further lean. This is the potential price leg that we've mapped out down here. My buddy Ab there. Well, you're going to call you Abs. I picture you as a retired dad with a six-pack of abs. So you're going to be Abs from now on. That's going to be your nickname, Abs. Okay, so like Abs was saying, is expecting further downside on the day. So interesting how we start to get that Judas kind of look to a run higher and then turn around and start coming back down, blow out the low, breaker, breaker. We saw hat tipping. Every time you see a break through a inversion fair value gap with a body, again, we're talking about this from a premium discount range. Which one of those? So here's your discount range. I think that was the 50%. We did talk about this already. Yeah, that's the 50% one there. So if we close below that, body, return to, continuation on the downside. That's where you got to start second guessing yourself now, saying, is this changing up or is it just coming back to a discount array, or are we digging down deeper into here? No, we've lost 1, 2. If you lose that one, you're definitely on the wrong side. Well, once the breaker's gone, I guess. Anyway, that was the kind of the tip that I like to look for. Elephant changing directions, swimming back against the current. So we'll see if this, again, order block, mean threshold, all the way up to the top of that breaker, which is also the inversion fair value gap here. All that can get hit still. Still no body below the low yet. So we have another fair value gap here. We've traded through it, and a body that is now closed above it. So now start thinking, if this gives up here, now we're losing the mean threshold of that candle now. Like we're right on it. We closed on it. So you don't want to see that go above that. Wick is fine. We expect that it can come up into here, that whole area there, and wicks do the damage, but you want to see that candle close below that point right there, which is right there. Line in the sand. You want to, because you start seeing it going down, then all of a sudden it comes right the way back into that. Not a good sign, because it just cleaned out a little bit of a low here. Consolidation. It loses its luster when it starts getting back up into here, because now you're getting above that breaker. Then you start switching back to Lori's idea of wanting to go long. See, when you get consolidations, your narrative can switch up. But again, you still want to find support. If you're going to start going long now, we've got an order block, trading back into it, mean threshold, and we have the inversion fair value gap now. So you want to see this hold price to continue higher. Because we're through the mean threshold of this one. We're through the mean threshold. Well, we're actually almost right on the mean threshold of that one. Inversion. We just come back in and tap this. Because it's not about the wicks coming down and doing any more damage. There's nothing else down here except for the lows and the rejection block. So this, you'd expect it to hold price if it wants to continue higher. There's a little tiny fair value gap there. We're in the consequent encroachment of that. There, it's just tapped it now. So like all consolidations, you're between this one and this one. You're overlapping now. You've got to start expanding one way or another. So we wait. You got rejection blocks on either side of this now. Because you're bouncing off a mean threshold. So you got a mean threshold here and you got a mean threshold here. So we're just kind of bouncing off of those between those 2 points right there. Ding, ding. So it's got to expand either to here and here, or there and there. Those are the next PD arrays to reach for. Or just extend the range higher or lower. Make up your mind. Digging all the way back through to... I don't see anything in there. I might have a little bit more of a... We still got this little tiny piece here. We do like precision. So it's waffling over the 50% of that range right now. Decide where you want to go, up or down. Southie, having a late dinner. I haven't even had breakfast yet. Still in my PJs. No comments. Disabled. Oh, I disabled all the comment section? I'll have to look at that. Yeah, I'll have to see how. I'm not sure how I have that enabled. I'll have to check into my settings. See how it's just banging around between the mean thresholds right now? Back and forth, back and forth. Now it's got to run somewhere. It's run out of arrays. You got to do something. So we sit and watch. Retail's looking at a bear flag, I guess. It's time like this where you kind of give your brain a rest for a bit and wait for it to break out of this little range here. If you're still studying price action, then you want to see it. It's getting our rejection block now. So if it turns around and comes all the way back down to the other rejection block, they're like arrays inside a small, tiny little range. Or it wants to expand out, and we have an impulse leg that pushes up and away. Now you also have that inversion right above us as well. So see how it hit that spot? Just a little bit above that one. If you look at the high on that candle, it's 95.75. The high on this candle is 96 already, so it's slightly up above that, and that's sitting at 96.5. There you go. So now that's banging into that inversion right near the top. So midpoint is the top of the breaker. If we get a close below that point and we get a close above here, that's the line, or the elephant in the water type thing, saying I'm changing directions. For me, I'm looking at this as a potential change in direction to continue to the upside. Because now all of a sudden, when we were sitting here deciding, are we going down, or are we going up? We start to reach for this. We don't come back into the range. We just pop up above it into this inversion. We're still overall short, but here's where I'm building the narrative around higher or lower. What do I need to see to continue going lower, and where does my trading plan change? At what point will it change and I start to think about going the other way? Now again, I'm not in a trade, so there's zero stress. So I look at this as just a price action study, and either supporting an idea of how I like to read the charts, or if I'm totally wrong, I've got to come up with a better narrative. That's the top of the breaker right there. See that reaction off of that? I love it. We were forced to have to push. The algo has to now reach for a new array. It's run out of arrays in here, so now it's got to start expanding somewhere, up or down. It expanded to the upside, still inside the narrative for a short, right there. Now we want to see this climb through here, get on top of it. Now that changes my direction away from this, going short, to the potential run up into a 50% of this range. Then I start pulling FEB tool from here to here and start looking for where's the 50% range. Do we are heading back into this breaker? Are we heading for a premium array in the 15-minute fair value gap right here? Or is that breaker, is the last little line in the sand right there? You touch it. You're still below this inversion. Is that inversion holding price? And we get all the way back down into this rejection block, these old lows, because this has been worked now. So we want to see this start to really eat through here and get back into here. And you look at these guys again. This is why it's mentally exhausting. Sorry, mentally exhausting to see. Keep your eyes on these things all the time. Body traded below it. Body traded below it. That's all good if I want to keep coming back down again. If that's your line in the sand, the water came right up, ebbed right up to your sandcastle, and then moved away. Didn't quite take you out yet, but right there is where my line in the sand is for short, staying short. Line in the sand for going long is we need a body above here. There's a little tiny fair value gap down in here. So now for me, I'm between premium and discount. And really short. Now most people don't give a crap because that's nothing. Unless you like 10 handles. 76 to 100 and... There's almost 30 handles right there. I don't know about you, but Michael was talking about 10 handles. If you can get 10 handles out of something, there's still potential to work micro scalps here. Super sniper stuff. Now trade right up into here. Come right back to the rejection block. Or not. Leave that open. Watch right there. We're in. We just tapped it right there. I love the reaction off of that. Then the bottom half of the fair value gap is here. So it's tapping on it, popping off. So we're going to roll through it. If you come up and tap that, then roll through it. Then that becomes inversion again on a discount side. And then you continue through to rejection and so on. There, tippy tappy, roll over, come back down into here. I haven't even been looking at time, so here's where we get, it starts to be the bottom of the hour. This is the bottom of the hour now. We could just see a nice little run up. So we have a like array to a like array. The crazy Ivan, and then come back down. Maybe? Who knows? What do I know? When you get into these consolidations, trying to read it and make up a narrative, something to make the show up, keep the show alive this morning, hey? So we have small array inside that range. The premium array is up in here. for that higher range. The one above us is this array here. Mean threshold. Tap it. See that? Pop off of it. Now we want to drive through it. If this little guy's holding price right here, which it did, and now we're looking for a run through here. So you're in this guy here and that guy there. Look for this order block. Does this order block hold price now? Do we get a fair value gap forming in here? Come back, find some support at it, and continue pushing higher. So look for that order block to see how it reacts off the top of it, the body of it, the close. Because then you'll see we're starting to compress again, right? We get between this order block and this one, and you're compressing, and we got to do the same thing we did when we were banging around inside here. We've got to expand. So you'll see either a run up higher or run down to take these lows out. You're between those two right now. We've hit the top of the mean threshold. We've come back down to the order block. Run through now. Keep going higher. Then that becomes our next order block. See, we've validated it already. You want to see a body close above it though. Let's get in here. You also have this little inversion here as well. This one here. Look at that body once again, hit it. There you go. Now the narrative changes. We have to wait for Ab's idea. We're back into Lori's idea again now. Where's the camera? Oh, my camera's right in front of me. It's looking right at me. I've got my cover on. I haven't turned it on. I'll turn it on when we get 500 people. I'll stick my little face down in the corner there and be all crazy and narrated. And you'll get to see my mug. And it doesn't look as pretty as my picture anymore, let me tell you. There. See, now we got a body above that. Now I'm long. Pull your FEB tool from here to here. Things start changing up for me now. %, 62%, back into the breaker. Now do you roll over, come back into the consolidation again and start pushing higher. Because now we've worked the upper part, seek and destroy in the 1 minute. See that? Consolidation, bear flag. Now the bear flag people are getting beat up. We're coming right back to the breaker. Bang. Right on it there. Above 50%. Can roll over, come back down again. When everything's consolidating like this, it starts to get really kind of, yeah, I can argue both sides of it now. You can either roll over and come back down into consolidation and then go higher, waiting for no more than 50% of that to get taken out. You want to see just the top get tagged now. This fair value gap to stay intact, and that inversion to hold price. This one here, you want to see that hold price as well. So that guy here switches to over here. They're kind of overlapping one another right now. You could almost say, let's just pull it back to there. That way you get both of them. That covers the midpoint. This one brings us back into here. Now here's a potential to go long. Stop loss would go here. Not that you're actually going to take this. Remember, this is a mitigation block. We did not take out that low. So you're mitigating. Also at the bottom of the inversion. And you're really between here and here. Come up, tag that. You're in this little range that's starting here now. What's a discount array? That guy right there. This guy brings you all the way out to, you wouldn't want to see the body get taken here. Inversion. There's so many overlapping stuff that supports or negates where price is going to go right now. Yeah. We're in that whole, we're coming up for the lunch hour time now, right? Makes it a headache. You see how when you use enough mental capital on this, it can be exhausting just trying to reading these minute by minute candles. That's why my brain's kind of burning out now. Reading minute by minute candles can be really exhausting. And the moment you drop your guard and something happens and you didn't follow it inside, focusing on your narrative, then you got to get back on side, renegotiate your ideas. And when you're not in a clean environment, it can be really exhausting trying to track every one of these, because you're constantly switching up your ideas of long and short when you're getting into consolidated markets. Also, when you're marking time, like Kirk just said, when you're marking time in this time distortion period, all this is just mental capital you don't need to waste unless you're studying price action. And all we're doing is studying every candle, where it's going, where I should find support, even inside all that stuff. Does it still hold true? And so far, we're looking at every candle and they're still doing the things we want them to do. Oh, my brother's calling. Let me just go quiet here for a second. Okay, I'm back. My brother's just booking the hotel room for Hawaii. All right. So, see how that idea changed for a long? What a nice little place. 15-minute fair value gap. Look at that nice reaction over there inside that little fair value gap. SIBI that has yet to be filled. And now we're like right near the midpoint of that, the consequent encroachment. So back into, we want to get some support off of here now. Back to the high of the consolidation. Run up, find some support in here. There's your support. Now you want to see that push through and continue up. So Lori is our grand poobah winner of the day for seeing, I like to see upside, he said. And Abs, we're putting you on the sideline for a second. Your idea for low. Overall, the bias is low. I totally agree with you. But you got to be flexible with our idea and switch it up. And that was our switch right there. As soon as we blew this out here, that was the tipping the hat for me, especially when you start closing above it. Come back into it, find support at that upside objective. Now pull your FIB tool in there and look for your upside objective. So that's a premium array. This is all premium candy here. Old consolidation, breaker, not really a breaker, but it's like the parent one of the, it's the highest up close candle run that begins this whole process here. I guess that would be the breaker right there for these swing points down. Yeah. Anyway, back into this consolidation at least anyway. So I like the little stepping action we've got going on there. Looking lovely, lovely, lovely. Now you want to see this kind of thing happening in here. We climb up on top of it. Now you want to see that provide a level of support there, back into the order block. I guess it could run all the way down into the tippy there. Tippy, that's an ICT thing. Tippy. It's very complicated. It's part of the charter member stuff. Tippy. Well, my hats off to you guys who have stuck around. All 14 of you who have stuck around to read price action in a crappy time to read price action. My hat's off to you for having the fortitude to stick around. Kudos. At least that's what the 4K in my account says. You got 4K in your account. Good for you, man. Because Michael's concepts are fractal regardless of the time frame, I find that using a tick chart with a value of 6,800 gives me beautiful PD array as well, overcoming the time distortion. Yeah, Lori does that too. Or Lauriston does that. He adds a tick value to his. I still don't know how to do that, but he adds a tick value like 4,000 or something like that, and it takes this time distortion and spreads it out. And the PD arrays that we're looking for here, you assign a tick value of 4,000 or 6,800, and these things now become this kind of stuff. It becomes a lot cleaner and clearer for you to see that it's still running the algo. even despite that time distortion, it's still running the algo inside there. And what we're trying to see here on the 1 minute seems a lot cleaner when you use a tick indicator as well. So good for you, Kurt. Abs is still in the race, man. Of course he is. We're not discounting anything. Right now we're just putting that on the sidelines in the back burner, stewing on the back burner, as it were, while we snipe out some retracement here. This could be just a simple retracement back into the range, coming up for lunchtime, taking out that New York AM high for lunch, and then turning around and continuing on our downward trek into Ab's idea. Sammy J, thank you for giving a candle by candle review. You're welcome. You are welcome. It is my pleasure. My pleasure, my pleasure. So, breaker, inside the breaker, bang, 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 bang. You could turn around, and Abs will be saying, I told you so. Which could be Scooby-Doo. I know I keep clutching at straws with these price legs, but again, you take them with a grain of salt. Sometimes I get them, sometimes I don't. They're not a huge thing. I put a lot of, I bank a lot on them. I look at studying the smaller candles for my arrays, and those price legs are just like gravy. If they pan out, that's fine. It just gives me an objective to reach for, and I can start scaling bigger chunks out down there if need be. Kurt, I love this stream. I love that you love this stream, Kurt. I'm going to give you a whole bunch of hearts. I appreciate the love, my friend. I appreciate the love. Yes, look at that. Build on top of this inversion or fair value gap. Came down, hit it, tap it, and now we're between this dude and this dude, or the bigger one premium and the bigger one discount, right in the middle of that mess of candles. 50% right there off that big range. I sound like Joe Biden. Trillions of dollars. I got you trillions of dollars. All right, there's that fill. Done. We have another supporting price to the upside. Now, whether or not you find value in things like what we discovered here about when the inversion fair value gaps give way, and I know Cody's a big fan of these, but when these inversion fair value gaps give way, for me, they're a really big indicator that we have a potential support to go higher. And again, if they have confluences that support a further upside, you could be catching very early in a 1 minute chart these price structure breaks. You're breaking structure to the upside, fair value gap, come back in to the old high. Then you start to go, now I found something that supports price. I'm inside the discount of a big range. I'm going to go long there. Stop loss going to go here, and I'm just going to sit, keep it really tight, watch my leverage, And as soon as I start breaking the 50%, I'm going to unload 62%, unload above here, because I'm in a really crappy kind of bouncing around day. Not that I'm encouraging anybody to trade, of course, but you know what I mean. Order block here. We have a fair value gap forming back into order block. Now you want to see this start giving way. You don't want to see that as being resistance and rolling over and getting back down again, because that's the premium, the discount, right? So we want to start really pushing up into this fair value gap above us now and making that turn into either an inversion to go higher or the lunch hour run on liquidity. The 11 o'clock run on the 10 o'clock low. Beautiful. That's what Lori was talking about. You'd like to see structure change. And then we didn't see structure change until we broke that consolidation and that high that we were talking about. And we did right there. So right there's your little impulse leg, that elephant dipping the toe in the water. We got confirmation. We were looking for confirmation ways to prove our theory. And it started to prove our theory out. Now we're heading in the direction we want for, again, really sniping out your 10, 20 handles, whatever you want. And be okay with it. If it runs away on you, great. But that would be the objective to reach for a lunch hour run on liquidity. Seek and destroy. Seek and destroy. On a 1 minute. Laurie's like, how does the 5-second chart look now? 1150 macro. It is. We're starting that macro. Now that macro all the way to the top there would be a nice little lunch hour. At Southie, yeah, look at, it just took out some profits under the 270 low. Looking for 1046 candle now. Thinking it's going down. Oh well, I'm stubborn. All right, so build your narrative around going down. So how do you continue to support going down? And what would support going up? When does your idea of going down get taken out? Or when does it come into fruition, when you start to, like right now, obviously we're going up. So for me, we start to lose this candle on the upside. Same as this one here. We start to lose this on the upside. We still got more upside. So we're still looking for here and then here. So that there is your, okay, we've come back into a premium, roll over and come back down and take these lows out. If we keep this candle, if we don't, look at all those inversions. There's so many inversions in there, my brain would fry trying to hold on to them all, but that's the 15 minute. Got this little fair value gap here. We just keep popping up. See how we just keep jabbing into that 15 minute fair value gap? If this holds, we're back to abs again now. We want to see this one give way, that candle give way on the downside, lose this swing point, come back into it, or here, or this inversion, and then this inversion becomes the idea that we're turning direction again. So look for this to hold, to go down. Look for us to break above it if you want to continue to the upside. That would be my narrative. I don't know what you guys are thinking, but that's where my eye is going right now. And the more you do this on the 1 minute, the more you become mentally fatigued. You just skip over some really obvious things that are staring you in the face too. And you go, ugh, I missed that. My brain's getting too tired. Long entry for Lori was 11:49. 11:49. Right before the spooling spooling. This order block, there's his 1149 candle. He likes to get in here, right off of that, right in that fair value gap, back to support. Nice, that's an excellent candle. Did you get in on the high? Did you manage to get right off the top of the inversion gap here? Did you get in here? Here, 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 there, there. There's like multiple different arrays you could have played with there. But that's a nice one right before the spooling. Sounds like a movie title, hey? The Spooling. It was just before the spooling when his bank account began to overflow. See, now that, if that's your entry, is that your exit? One of your exits? Is this your exit? Or are you aiming for up here still? So, because even from returning to this order block, that's 10 to there is 29, so it's 20 handles. Taking that high out, you get 29 handles, or 20 handles. From there to there. Return to here. Stop loss here. Go long. I don't like the way we keep poking around on this thing here. Look for this level here. Is this breaker holding price? Are you all banging around inside it right now? Are we just eating it up and then leaving town on a midnight train to Georgia? Are we gonna roll over here and start coming back down? Nimble, nimble. Gotta be super nimble if you want to start nibbling some handles out of this in a crappy lunch hour start. I still like this idea up here for lunch hour. Lori entered at the close of the candle, aiming for the high. Hope I don't get stopped out. Gotcha. Aiming for the high up here, you mean? The lunchtime high. And your stop? Where's your stop? Lunch hour. Now this fair value gap has been filled. You want to see this really start to get some lift here now, or we just waffle around in lunch hour. But I want to see that. Usually you'll see it just before lunch hour start to move up and take out a high. And what time we at? Here's the 10. Last minute of the spooling. It's a great spooling. We have 10 more minutes. See, we're already eating through this already. Yep, I've got a feel for a long in here. I don't think this breaker is going to hold. The fact that we've been banging around inside it, eating it up. It's like a big piece of cheese. It's being eaten away at, nothing left of it. Now we're finding support on the open again of that fair value gap. Now you want to see it run all the way through that. Give Lori a high five for a call. He was waiting for some structure down here. We had to wait for a while. We finally saw it right here. A lot of waffling off that guy there. If you stick to your guns, you're still aiming for here, good for you. Body breaks the high, return to order block, continue pushing higher, wait for that order block to get lost, inversion again, There's so many little inversions in here. Mean threshold, take out that mean threshold, take out the liquidity here. We've just hit right off that candle's low. You want to really see it digging in here now. Oh, look at you go, Laurie. It's a good thing you're sick. You don't have to carry all this cash to the bank. Look at this. Direct deposit, man. Direct deposit. Move the stop loss. Yes, damn right, man. Protect your assets. Protect the assets. Going for the lunchtime high. Woohoo! And who's going to be brave enough to take a turtle soup at the top? Who's going to take? Shake it off, shake it off. Okay, so we have breaker, lost, upside, liquidity taken. Next pool of liquidity is sitting right above here. Lovely. So now we're over here. You'll find your inversions and find your supports. Otherwise, that's where I'm looking. I'm not going to start drawing them all out. You get the idea. That's our objective up there. Now, I want to draw my price leg again and see if it works. There's a price leg to here, and the price leg to here. Dingo. That one worked. Don't forget the rejection block. Give your Uncle Sally. Uncle Sal. Don't forget to pay Uncle Sal. There's the tippy tippy. Are we going to get it? Yoo-hoo! Vindication, says Lori. Vindication. Lori. Yes, ma'am. Here we go. I'm happy for you, man. Good for you. So we saw how we're waiting for his. He saw that this was taken here at 11 o'clock, takes out the 10 o'clock low. Now he's looking for an indication for a long. We found his indication here for the long. That's where you're wondering whether or not you're going to go longer or shorter. So it beat us up in here for a while, made us second guess ourselves, and then the moment it pops through the high, right there, comes back, tags it, we're off to the races. That's almost like the inversion fair value gap again. When you lose that high, for me, you're off to the races, and that's where your objective is. And we celebrate. High five. There we go. High five, my buddy. Laurie. You can get yourself a new set of fire hose now, my friend. Daddy needs a new helmet. Well done, well done. Did anybody else get in on that trade with Laurie? Not that you should be trading on Farm Payroll Week, but hey man, you see an opportunity like that and you took it? Good for you. This is where millionaires are going to get made, man. Millionaires in demo. Demo ballers. Now, is that not the best video game you could play? And we just took the hill. We took the hill. We're mired down in the mud. Got a foot out. We saw the elephant leave the mud, climb back on. Then you found your footing. Found your footing. See the mean threshold? Finds the footing inside the fair value gap. Breaker even. Breaker inside the fair value gap. Go long. Hello. Beautiful. Beautiful, beautiful. Now that's nice. Well worked time action, price action. You spent some mental capital. We spent mental capital for an hour trying to find something that would support our price. We built it right through all of that, and you finally got your objective. That's a nice little run from where we discovered the breakout here. 298, so let's say 300 to that one right there, 370. There's 70 handles. That's a week's worth of trading right there. If you did 70 handles for your week. And that's why when you spend some mental capital on working each freaking candle, you can see this formulating itself. In cleaner environments, man, I tell you, this pays off. It pays off. And well done, Laurie. Well done, my friend. We will celebrate right here. High five, Laurie. Yay. High five, Laurie. Did you leave some on? By the way, Laurie, are you still in this? Are you still feasting on this animal and getting back up into that daily fair value gap again? In the mean threshold? Again, now you have to start going over here and find out what your higher time frame areas that support price, and go into the higher time frame stuff now and pull your fibs and do everything we've been doing on the 1 minute on the next higher time frame to see if it continues to support price to run up higher. If you're looking for a 15-minute, for example, looking at the mean threshold of this candle right here. Right there. That's the 15-minute one. Now, now that we've got a body above this, this would be nice if we climbed up on top of this one, dipped into it a little bit into the top of this order block, and then started running back up again and start blowing right through this. Start really climbing up through this and get back up into rejection on a 15-minute. That would be fun. Then we get back into that yesterday's gap. I do like that idea. This could be a nice little 15-minute launching point. We'll see how that 15-minute fair value gap, if we close above this 15-minute fair value gap, do we find a level of support in here all the way back to the top of this, or the mean threshold of that? What is that? Let me have a look at that one there. Yes, it is the breaker. You see that? That is the breaker that ran the low. So if we take this inside here all the way down to there, I want to see no more than the mean threshold or back to this candle's high, mean threshold, providing support to continue up. So I'd want to see no more than here. I wouldn't want to see it tag the midpoint yet. I'd like to see that stay open. Create another fair value gap here on the next 15-minute candle. Come back, find support at this old high here, no more than the midpoint, and then continue up for higher prices. Look at that. Look at that. Close out at the high. That's good. You get some cough syrup, get a blanket, sit on the sidelines now and smile to yourself all weekend saying, yeah, I nailed that one this week. Got this Thursday reversal at 11 o'clock. Just made it an inversion. We just closed on the 15-minute. Did that close above? It sure did. It sure did. Right there. Now I wouldn't want to see. So if that's the 15-minute, right in here, I want to see that hold. Premium discount. That's the spot we're looking for, right there. Is that not the point I was looking for on, we'll see if this right here, let's see if this is actually the midpoint of the breaker on the 15-minute. Let me see if that, because that looked like the potential for it. See, now we've got the order block, come down, find support at it, roll over, pull back into that lunch hour range, just taking out the highs. So my thing is, if we don't break that mean threshold of that order block above us, and we start to retrace back down, if we blew through the midpoint of that breaker on the 15-minute, then we're going to dig further down. So that's the 50% point. And also if I go to the 15-minute chart, look at that, right on that 15 that 50% is also right on top of that midpoint of the breaker. So that's my line in the sand, I think. So let's see. I guess the wick can wick down into here, but I want to see a body close below that. Because then are you looking at what I'm looking at? Are you looking at what I'm looking at? Right? You see that? Here, and then another price leg up would take us well through that thing. Darren, you and your stupid price legs. I'm just playing. When I see it, I gotta play with it. I gotta check it. Is it possible? Let's go over here. What's that give us? Ooh, is that an area of interest? Perhaps. Now if I put it right to the level it's supposed to be. Does that give one concern about the potential inversion? That'll be in the middle of that breaker. Just curious, that's all. Just curious. Moral of the story, don't be stubborn. LOL, good thing I just demo trade these days. Yeah. That's the whole part about marrying your trade. Right? But that's okay. We were looking for the downward bias is still there overall, but we're seeing out here on the 1 minute, we're trading the 1 minute, so our bias on the day is not even part of the equation right now. So we just have to trade what it's happening. And right now, because you're in the 1 minute, we're in the leaves in the trees. We're trading where the wind's blowing. And we're just trading the wind blowing right now, giving us our setups for quick little runs. That's a really nice little run. Despite this little bit of noise inside this breaker, that's a nice little run for that high. Buddy Lori kicking it. The fact that I've got that line there and it's not even really reacting too heavily off of it, that's the mean threshold of the breaker. Fair value gap finished, traded through it. We're not even coming back to it. We're traded through this one already. So we got to start seeing these climbing back through, or we got this guy down here. %70 puts you right in here, right on this breaker. If this one doesn't hold, then I'm looking at this for a deep discount. Optimum trade entry 62% off another breaker down here if that one doesn't hold. So just so you know, I'm looking for whether or not this candle holds price now, or if it rolls over and comes down one more time, then I'm looking at this for further upside. If not, if I lose that candle, then I'm not so bullish anymore. Ideally, I don't want to lose this one for the 15-minute breaker, because 15-minute tells me there's more upside. But whatever time frame you're on is the time frame you have to trade your plan to, right? So I want to see that order block give way, and let's get back up on top of here now. Then my new price leg begins. You lose this mean threshold, that price leg up is the next level. Next level we run to. I want to see that order block hold price, hold these lows. And he's got to give way. We're between these two guys. We're wrestling. Arm wrestling now between these two. Who's going to win? Who is going to win for a long or a short? Breaking structure to the downside. Down. Body trades below it. Trades back up into it. Right there. There. Continuation on the downside. That supports a down run for me. Order block. Can't trade back to the order block. Get short. Break structure. Trade back into it. Get short. Order block. Trade down below it. Trade back into it. Get short. So, bye-bye. I've got multiple different things that tell me that that was just a run on liquidity. Did anybody take the turtle soup? Did anyone take the turtle soup? I expect this to give way now. Just to find some support here. That was the price leg I wanted to see. Didn't work out. Whatever. Look for this breaker here now. That's a deep 62% retracement right in there. Do we get a higher run? See, the bull's still not out of the race yet. Shorted at 12.25. That return back to the order block, yeah. We're going to have to shuffle Lori's high five back down into here. Yeah, he's losing it. Yeah. Okay. So we're going to have to get... Where's Lori's high five going to go? Old highs. Filling it in. Low. $11.58. 1158. Shorted. It reaches 11.58 low. Oh, his guy, hey? 11.58 low there. Wait and see what happens in here. If this is you got a body below here, that's good. Back to it. I wouldn't want to see it start coming back up through that. Oh, you could have a swing back into these equal lows here. We already had a body come back, hit them. Here, I want to see that just start keep descending now. Look at that breaker. You want to see it just roll over it and get back. See, we're back inside this inversion. Now roll over and come back down some more. Give Lori a money bags day. What are you going to do with all this Monopoly money when you're done, Lori? You want to see this breaker get eaten through now. If you want to keep pushing through the low, so look for that to draw straight out to here and here. And you want to see that big chunk give way there now, between that high there and this high here. My insight, as Darren said, stick to whatever time frame you're looking at in the moment. Yeah, build your narrative on your own, in your time frame that you're in. And see if it's you're talking yourself through it. This is good. I ignore this now. That did not support price at all. Oh, you're buying Boardwalk and Park Place. Getting cocky, hey? Putting hotels on there already? Wow. Good for you, man. I'm gonna come check out your hotel down in Trinidad and Tobago, man. I wanna say, save me a seat. We gotta do something about those little plastic beds because they're hard to sleep on. Buying right there, stop loss at Lori's take profit. You're gonna go long right here. You're gonna go long off of a breaker. So you want it to take the breaker out. And you want to go long here. You're gonna go long where Lori's unloading his position. Is that what you're saying, Cody? On the left side, I see high with two lower highs at 1140. A high with two lower highs at 1140. I'm not sure I understand what it is you're looking for. I'm not sure I understand what you're looking for, Cody. Plastic beds. I'm in a buy already. You're going long already. Okay. You're taking this high right here for long. Okay, I get you. You're just keying off of here, expecting it to come back up here. Sure. The fact that we lost this breaker already. Mind you, we haven't got a body yet below it, but we certainly have eaten through the mean threshold of it already. Yeah. It's definitely a possibility, Cody, for sure. So build your narrative now. You want to see it get above that candle. And you want to see it get above these inversions now to provide a support that this is a temporary or short-term swing low situation. Look for your premium and discount. Look for your areas that you want to start sniping some profits out of. And when that idea for you fails and you need to get back on side, if it continues down. If you're right, it continues up. Look for your support. If it starts to break down, where is your line in the sand that says, I'm wrong? Move to the sidelines and commit to that as a move to the sidelines. And if you're wrong and it turns around and goes back up against you from that point, reevaluate why you made that your level and make sure it's not from a psychological fear, but under what you consider logic. That's the only advice I got for you there. Not that you asked for it, but yeah, nice place to take along if confirmation happens. That's kind of strong when these are created, and when breaks, it's hard to get below it. you still have potentially this order block, this cluster of order blocks up here to reach for, and that fair value gap up there. I really want to see this little one here getting some body on top of it to get a little bit of support for that idea to go higher. Right now it's tough to call it because you got just a whole schwack of mess, but I want to see something get above here with a body and then get on top of that for here to get you some leverage off of this here. Otherwise this breaker down here still, my eye goes into here, the bottom of that fair value gap inversion still in sight for me. A lot of wicks bouncing around in there. What's the time? That's the crazy Ivan. This could continue down. That little look back for the first 8 minutes after the swing of the hour, bottom of the hour. Crazy Ivan look back and then continue on. $40 is a swing point, so this may turn around now and move back up. The next 5 minutes you could get a bunch of swing points here before the next macro starts. I'll get a body above here. See, if you're going long from that, I think what Laurie was saying is, look, now you got to look for your support that supports that narrative, that idea. And if you get this body close above here now, you got 10 seconds. Good. Now you want to see support at that level. Order block. Now you want to see it start to leave. For this to be the swing, that's your inversion. You're above it, in it. You don't want to see it come back through and close through on a body, though. You want to see that start pushing back up now. If you're holding that as your low. You're getting the body starting to come back through it now. This is why I say the next few minutes, next 10 minutes, you can get a lot of side-to-side swing points until the macro begins. Close below it. You're back into it is, it isn't. It is, it isn't. For me, that's all I'm seeing is on a 2-minute candle, that was just a wick, and that wasn't anything here. So now that is a valid order block. So you got here and mean threshold to continue down, because there's no more arrays below you except this breaker. So here you've got wicks, and you've got a candle that is providing support. So you want to see that blast right through it, get through the mean threshold of this if you want to keep going higher. Otherwise, if this provides a level of support, the only thing you got left is wicks here, and then you got to start coming back into these candles again. And one more candle might get you a swing point, so you want to see it really rocket through here now if you want to see your higher price. I'll put that on the mean threshold there. We'll see if that holds. See where that closes now. The next candle should be a swing point. Yeah, it looks pretty clean now, doesn't it? Those lows. See how we've closed? We're still closing below the mean threshold. Rejection block above, old highs. We still got this guy up here yet. And all that's valid for a continuation on the downside. I don't know what your upside objective is, Cody. Whether you're taking it, you're nibbling a piece off here, or whether you just keep going for higher highs. You want this candle here now to provide support for you. There's the fill of the fair value gap. Back to the order block. Almost fill. There you go. Swing, we need to blow through here now. Look at your 50%. $62 puts you here. Rejection block. Nice. Good call, Cody. Right off that high. You got yourself an optimum trade entry. Now, are you going for a higher run? I'm sending image into Telegram. What was I talking about when you have a high with two lower highs on an up move? That's strong. When you go above hard, get below it. Okay. Now, do you have an objective that you're aiming for? And Lori, are you still in your trade? I'm done for the day. Be safe. Happy trading. You have a lot of room until the daily order block. Nice. We're gonna have to change this into a Cody candle. Nice job, Cody. Nice look, man. Let me put that right above that. Great work, Lori. Have a great day, man. Cody, nice work. As soon as it takes this high out, we'll high five Cody, and then I'm moving to the sidelines for the rest of the day. My brain is spent. So, excellent. There he goes. You got your high. Yeah. Ooh, nice job, Cody. Good call right off that high there. Right on the money. That's 35 to 95, I think it is. Yeah, 95. So you've got 60 handles right there. Good work. Oh, well done. And there's potentially more upside. Closed. Nice job, buddy. Good for you. Man, that's a high. There's a high five for you, man. Good work. All right. 2 snipers today. Well done. Well done, Cody. And well done, Lauriston. Well, I'm proud of you guys. That's nice to see people banking some Monopoly money today. I like it. Well done, well done. Thank you for all supporting each other here, supporting Cody on that trade and Lauriston. I like to see the community supporting each other. That's excellent. Abs, we'll have our day in court again, my friend. We shall have our day next week. Next week's our run. We're running right through Cody here, but we're all right with that. So we will. It's good. We're talking through this, man. I like it, and it. Hopefully, it all made sense for you guys, and you had some fun here this morning. I certainly did, and it was fun calling, and it was fun. The interactions were great. I think we got some. I got some value out of it today, and thanks for Lori's call this morning at the 10 o'clock, taking out the 11, or the 11 taking out the 10. Love it. Looking for a setup. We got it for a run. That was a banger, and Cody's banger run here on this high. Nice call. Really, really good. So, teamwork, man. All did really well. And we got to learn something. We got to study some price action. Those of you who did not take a trade today, that's okay. That's okay too. I didn't take a trade. I'm quite happy not taking trades, but those who did, if you did, and you did it on a nice logical run, that all made sense. You could be proud of that trade you just did. Despite everybody saying don't trade non-farm payroll, you found a logical place to enter. It made sense, and you got your profits. You moved to the sidelines. You did everything you needed to do. You followed your plan. You didn't just go, well, it's non-farm payroll, but I see a perfect setup here. I'm going to take it. You didn't say, oh, I'm not going to touch it. You actually traded your plan. So congratulations, Lori and Cody, for trading your plans. So well done, everybody. So please rest your brain and hydrate. We need you rested for the next candle by candle reading in the community. Thanks, Kurt. AB should have stuck to my bias yesterday. 240, then up. LOL. Don't beat yourself up, buddy. I was looking for a bias on the downside today, but that's okay. We don't have to marry our bias. When we see an upside trend that supports the upside or the contrary point of view, that's okay. We still got on side. We still started talking, and we stayed in the, oh, well, this could be the retracement on our overall bias for the day. Our overall bias seems to be wrong, which is okay because we're still on the right side. Even though we said our bias was down, we weren't trading anything down. We're looking at all this stuff that supports upward price. So we're still on side, even though our bias was on the downside. We still got some great trades off of that. It realized itself. We weren't sitting here constantly trading against it. We're in flow with order flow. So excellent. I'm happy, you guys. I'm happy. So, well done. Yeah, all upside move is fake for me until we lose the daily order block. Or we go above it. Good work, Cody. Nice. Thanks for your input today, Abs and South. Love it. I will see you guys tomorrow for the non-farm payroll, and I want to see if I can catch something in the afternoon, maybe TGIF Fridays, maybe there's an afternoon once it calms down a little bit, we can get back into I can grab an afternoon trade for the rest of the week. I don't want to take away my profits, so I don't want to go into the weekend with a loss, so I'll be very lean on my trades tomorrow, it being non-farm payroll. I probably won't trade anything in the morning. I'll probably wait till the afternoon. Depends on how nutsy it looks. So I will see you guys bright and early tomorrow. Thanks so much for everything. Love you guys. It was fun. That was a fun day. I enjoyed that. See you tomorrow.